Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, Donald Trump and Nikki Haley offer clashing visions of America's place in the world, as well as that Bitcoin's price falls 15% following launch of Bitcoin ETFs. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to both those near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. The first article to talk about, of course, is in relation to Donald Trump and Nikki Haley. Now, voters yesterday in New Hampshire cast their ballots over the Republican primary race, with Donald Trump and Nikki Haley offering competing foreign policy visions of the world, of course. Now, ultimately, this has been a key point within the Republican primary race so far, and we've obviously been covering the Republican primary race since its kind of beginning, and kind of even going back to its invisible primaries last year, where we, of course, were discussing candidates like Ron DeSantis, which have now dropped out in the lead up to this New Hampshire primary. And this is largely as a result of there just not being as much support as someone like Ron DeSantis would need. And this was despite, previous polls much earlier on in the year showing Ron DeSantis having the support of 22% and higher of Republican voters. And ultimately, at the moment, it does seem like Trump is the one to take home this Republican primary, with him having the most, the greatest percentage of voters supporting him in this Republican primary, and most Republican primaries, it does seem. As well as that, we've been covering the issues in relation to Biden and his governance, and in relation to how voters are kind of looking at the governance of Biden and the way he's been treating the economy, for example, where we have actually seen that most voters do believe that Biden has dealt with the economy in a very poor manner, and also do prefer the way that Trump, or at least the previous administration, did govern over the economy. And this is, of course, despite data really showing the way the economy has been governed hasn't been one that's super detrimental really, or nor one that's kind of not followed a kind of orthodox way of thinking about dealing with these economic issues that we are seeing at the moment. And largely we have been seeing these economic issues which the US has been dealing with across the world, and in fact the US has seemingly been one of the bright spots within the global economy, according to many investors and economic agencies. And this is a really key thing to note, as ultimately, despite Biden maybe being successful on certain fronts of actually dealing with issues, ultimately it's the way that voters do perceive the economy and the way they perceive Biden. Ultimately, it does seem that Biden's old age and the way he's dealt with speaking in public and dealing with arguments against him has been very poor. And then ultimately, he hasn't been able to prove his success with the economy, because ultimately the economy is doing quite poor. But the argument for Biden would be that Biden is coping well with how bad the global economy is as a whole. So that's the key issue at the moment. And ultimately, Donald Trump and Nikki Haley within the Republican primaries have been clashing on points of foreign policy, largely relating to issues here within Ukraine and Israel as well. And if we just think back to the Trump administration, we can remember the policies and foreign policy positions which Donald Trump did take, with him obviously offering a more isolationist view on the world and the way that America should position itself, with him leading that America First movement, which did put America, of course, first in the eyes of foreign policy. And therefore he was more so interested in moving away from being involved in the Middle East, where obviously the US involved itself greatly towards the end of the 20th and start of the 21st century. But ultimately, we are now seeing someone like Nikki Haley offer an alternative perspective, which is more so looking at aiding these countries which the US has usually had strong alliances with, and also looking to fight the enemies of the US in proxy wars and on different stages around the world without involving the US's troops directly, whereas Donald Trump has in fact opted for more of a kind of handshake and bromance, friendship with these kind of authoritarian leaders, which we would usually consider as enemies of the West. For example, Putin, as well as, of course, North Korea's leadership, where we have ultimately seen Donald Trump kind of interact with these world leaders in a far more friendly manner than we have seen ever before. And this has, caused some positives, of course, but at the same time, in times where we could be looking at wars in relation to the US and others, especially within the South China Sea, allying yourself as the biggest kind of Western world power with these kind of nations in a way may provide those nations with some justification or some leniency in enacting such policies. And that's the key worry for someone like Nikki Haley, who has been the UN ambassador and is trying to represent this more hawkish picture and view on the way that US foreign policy should be conducted. Now, the key foreign policy decisions at stake are relating to the funding of Ukraine and Israel, with, of course, the funding of Ukraine becoming increasingly divisive within the Republican side of the House and Senate, with many of the more hard right members of the Republican Party kind of providing a more isolationist view like Donald Trump's, where they're looking to not fund Ukraine anymore or as much. And, almost if they are to fund Ukraine more, they're looking for certain guarantees and certain kind of audits which may not be able to be provided during wartime. And that's the key thing. Whereas Nikki Haley is saying, this is a very, very important time for the US people to stand up for not only democracies, but also to stand up against, arguably the greatest enemy of the USA for the past, 50, 60, 70 years. And ultimately, this is a time where the US can represent its power and its kind of alliances and defeat Russia through Ukraine, essentially. Whereas, Donald Trump has kind of opted for a more, let's solve this through negotiations kind of thing. So that's why it's so important to keep your eyes on things like this, because we are looking at how Donald Trump will shape, kind of the globe and the way that, Donald Trump will influence these nations which could go to war very soon or are already at war, and that kind of thing. So that's why it's so important to stay on top of this. If Trump wins this primary with a significant enough majority, we could see Trump cruise to a very early victory in becoming the Republican Party's nomination. This obviously follows the third Republican primary candidate Ron DeSantis withdrawing from the race and endorsing Trump immediately. A win for Trump, however, will make it clear that the Republican foreign policy position is one of isolationism, with Trump representing a more isolationist streak on the right side of the US politics. Therefore, Trump winning in the primary will likely put the US on a path to less strategic alliances such as NATO and a willingness to make more deals with historic enemies, with Trump on Monday saying the Republican Party won't return to funding endless wars in countries you might never have heard of around the world. Haley, on the other hand, is more of a hawkish Republican who is also calling for more aid to Ukraine so that it can defeat Russia, as well as making it clear her support for Israel, with Haley justifying her positions on the beliefs that the West should provide Ukraine with the support it needs, and if they were not to supply Ukraine with the support it needs, we would be likely to see Russia and China invade others. Haley has a chance of winning in the New Hampshire primary, of course, due to the high number of independents. So this is very important to keep your eyes on, but we've been on this article for so long, we need to get off it. And a short article today, really, as the second article to talk about in relation to Bitcoin. Now, obviously, we usually just cover Bitcoin on the charts as kind of the second section of the briefing, and that's always important to kind of look at where those key assets are going into the trading day. And if you've been following our kind of more market analysis breakdowns during the morning market briefings, you would have seen our analysis on Bitcoin, where we have kind of talked about how the speculation on Bitcoin ETFs did drive prices for Bitcoin very, very high as we did end of 2023. But ultimately, since then, and starting off the new year, really, we have seen a significant sell-off in Bitcoin's price, following, in fact, the SEC approving of many Bitcoin ETF applications, which kind of came as a surprise to many people, as people had, priced or bought up much of Bitcoin in the lead up to this announcement, expecting the SEC to kind of approve the ETFs, and also expecting Bitcoin's price to rise further once the ETFs were approved. But ultimately, since then, we've seen the exact opposite, seeing a large sell-off. So why that's happened is what we're going to cover here. Now, Bitcoin's price dropped 15% over the past 2 weeks following investors taking profits. This follows the much hyped launch of Bitcoin ETFs approved by the SEC for the first time. These price drops unwind a large Bitcoin price rally as we ended off last year. The Bitcoin ETFs, which have been approved, however, have led to Bitcoin's price dropping, with flows into the ETFs being underwhelming, leaving investors with very heavy losses. Immediately following the SEC's announcement, there was a price upside spike. However, due to the fact that many investors had highly anticipated that the Bitcoin ETFs would be approved, the price of Bitcoin pre-announcement, I worded this really poorly, but basically, immediately following the announcement, the SEC's announcement, there was a price upside spike. But due to the fact that investors highly anticipated that Bitcoin ETFs would be approved, the price of Bitcoin pre the announcement of the Bitcoin ETFs were approved was already very high. Therefore, it had no room to run higher following the approval. And whilst the Bitcoin ETF could bring in some new liquidity for the cryptocurrencies, ETFs also enable market participants to exit the market, and therefore some investors are exiting positions after buying up Bitcoin a long time ago. And this is a very significant kind of issue, which wasn't expected, I think, for many of the retail investors into Bitcoin, which are now seeing kind of a sell-off following that expected push to the upside. So definitely keep your eyes on Bitcoin. We're now going to the charts, where of course we'll cover Bitcoin once again, analyzing the kind of asset just over there. So next to talk about, of course, is the charts, where we do have quite a bit to talk about. And to begin with, we are on the US 30 to talk about US indices as a whole. Now, of course, most recently, the US 30 has broken out that range that it had been sitting in since really mid-December, and had really been ranging in since the start of the new year, as we hadn't seen much liquidity to the upside or downside since the start of the new year. And we kind of put this down to the fact that maybe it's the new year, maybe investors are kind of slow to re-enter the markets. We haven't had too much influential market data to push price to the upside or downside. Plus, we were ending off the year with a strong market rally, so it was no surprise to see many positions liquidated, and then seeing kind of a stall out on price, where price was kind of around the fair levels to be at. And ultimately, since then, though, in recent days, we have seen price take a significant run to the upside, breaking above that top level of liquidity and resistance that we have seen form in a range. And once we've broken above that, we have now seen the US 30 come back on itself and retest that key area of resistance, but not quite reach that 3820 Fibonacci mark that we had highlighted as a key area for price to come back down to and interact with. So we're in a kind of interesting position here at the moment, where we're having to decide whether price has fully retraced yet on the US 30, or in fact it does have more to come down to, before reacting, of course, to that 3820, which we did expect to be that key level which price would move away from. So we are just keeping our eyes on the US 30 for the moment, but ultimately we are seeing some bullish momentum away from that liquidity zone and support level. So definitely keep your eyes on the US 30. Very interesting position, as we are now kind of pushing for new highs, and if we do react to that 3820, we could have great upside potential. So definitely keep your eyes on the US 30 and other US indices. Next to talk about though is the dollar, which has attempted to move higher, but has now kind of come into a double top kind of level, and this came after price did tap that 38.20 Fibonacci level yesterday. And obviously in yesterday's morning market briefing, we did note how that was a key level which price could interact with and move away from, but we were waiting for price to reach that, and it does seem that yesterday price was able to move low enough to interact with that level and move away to the upside, but we are still waiting for a continuation of that move and reach for price to reach that Fibonacci extension zone, but ultimately we are kind of struggling at that double top level where we have seen price sell away from before. So definitely keep your eyes on the dollar, a very interesting position to note for sure. Next to talk about though is Euro USD, which has broken further to the downside yesterday, and this obviously came after interacting with that 38.20 like we saw mirrored on the dollar, but ultimately we were kind of hoping, or at least expecting, a move that was more likely going to take place away from that 61.80 Fibonacci mark that we have leveled out here, and that's because it aligns up with that key liquidity zone which price was interacting with for some time. And obviously that 61.80 also kind of levels out with that counter trend line which price was failing to break through before finally pushing all the way through most recently. So definitely keep your eyes on Euro USD. It is surprising that price didn't reach that 61.80, but ultimately price has still sold off and continued that retracement to the downside after coming into contact with that 38.20. So nonetheless, this is a potential bearish position. So definitely keep your eyes on all things Euro USD. Next to talk about though is pound yen, which is still halting and stalling at that key resistance and liquidity zone, where of course we have highlighted before is the all-time highs of pound yen, and so we have been expecting a great deal of resistance in that level, because ultimately price hasn't crossed over this zone for many years, and so breaking above and over it will be a monumental move and will start making kind of new kind of market levels once we do break above that, and that 190 mark is looking to be the most interesting zone which price may interact with first should it break above this resistance zone. Ultimately though, we are just seeing price kind of range around in that liquidity zone, consolidate, accumulate, so definitely keep your eyes on pound yen. Next to talk about is Bitcoin, which has just continued to move to the downside. We are now even nearing that $38,000 a Bitcoin mark, which I did highlight in yesterday's morning market briefing as a key zone where price has kind of formed as a resistance level before. And so if price did make its way down there, I wouldn't be surprised to see a bullish move away from that zone before maybe retesting an area of previous resistance before moving lower. Ultimately though, we have just covered it on the articles, the issues to do with Bitcoin and the reason why we are seeing a sell-off at the moment, as ultimately those ETFs are allowing certain investors to leave and kind of exit the market. However, this could really be a positive bull side kind of opportunity, ultimately because those investors which are causing this sell-off currently are ultimately is kind of more of a short-term move to the downside, just because ultimately these were investors that wanted to get out quickly, but the long-term view of what these ETFs provide is more long-term liquidity and kind of formalizing the existence of Bitcoin and other cryptocurrencies within the ETF space. So we could be looking at a significant bullish move away from that 38,000 mark. So definitely keep your eyes on Bitcoin. It's a very interesting position at the moment, just because we've seen such volatility recently, not only ending off the year but now starting off the new year with this decision by the SEC. Definitely keep your eyes on Bitcoin. Next to talk about is gold, which is an interesting position also, because it's around these key Fibonacci levels, but ultimately not much to say on gold apart from the fact that it kind of is ranging around, not too much momentum to one side or the other. It'll be interesting to see if any kind of significant US data or ECB or Bank of England data this week will push gold to the upside or downside. That said, we always have to be listening out for key, news around world tensions as well, as that will be driving gold's price as well. So lots to talk about and think about when we're looking at gold this week and today. But yeah, keep your eyes on gold. Last kind of asset to talk about, of course, is oil. Not too much to say once again. Apart from the prices ranging around, once again, issues within the Red Sea are largely affecting oil at the moment, with issues to do with the supply of oil kind of keeping the price near that $80 a barrel mark, whereas we were previously expecting, a continuing move to the downside, whereas now we're kind of ranging around that $80 to $78 mark. So definitely keep your eyes on oil. Very interesting in regards to the issues in the Suez, Red Sea and Gulf of Aden. So keep your eyes on that. Last thing to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today, but the data is actually quite repetitive, and I'm sure you understand what I mean. So firstly, we will be getting French manufacturing and services figures. So very important to listen out for. As well as that, we'll be getting German manufacturing and services figures. Along with that, Eurozone manufacturing and services figures. And finally, for Europe as a whole, we'll be getting British manufacturing and services figures. So lots of important manufacturing and services figures in regards to Europe. And I'm sure this will be definitely affecting the way that people are perceiving, European economies as a whole, and also looking to the ECB and Bank of England in how they'll structure their monetary policy as a result of this data. As well as that, we're getting US manufacturing and services figures, and finally we'll be getting the US's mortgage applications data, and finally Bank of Canada's interest rate decision. So lots to talk about on the charts, but we've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later.